University of Mumbai, Mcom Sem 4 Personal Financial Planning Question Bank Solution MCQ Part 8. Dash risk cover the risk of market, interest rate risk and purchasing power risk. Option A systematic, option B unsystematic, option C financial, option D business. The correct answer is option A systematic. A systematic risk cover the risk of market, interest rate risk and purchasing power risk. Next MCQ, risks due to the internal environment of a firm or those affecting particular industry are referred to as dash. Option E, unsystematic risks, option B, systematic risks, option C, normal risks, option D, abnormal risks. The correct answer is option A, unsystematic risks. The risks due to internal environment of a firm or those affecting particular industry are referred to as unsystematic risks. Okay, so risk which is due to the internal environment of a firm and affecting a particular industry is referred to as a unsystematic risk. And systematic risk is cover the risk of market, interest rate risk and purchasing power risk. So it belongs to the external market and unsystematic risk belong to the internal market. Next is dash is non-diversible risk. Option is systematic. Option A unsystematic, option B systematic risk, option C normal risk, option D abnormal risk. The correct answer is option B systematic risk. So systematic risk is a non-diversible risk. Next MCQ, purchasing power risk is also known as dash. Option A inflation risk, option B business risk, option C financial risk, option D market risk. The correct answer is option A inflation risk. So purchasing power risk is also known as inflation risk. Purchasing power risk is also known as inflation risk because it is belong to the external market, and whatever external risk are there, what is there in the marketplace, it is always called as a inflation risk. Then dash is a non-diversible risk. Option A unsystematic, option B systematic, option C normal risk, option D abnormal risk. The correct answer is option B systematic risk. So purchasing power risk is also known as inflation risk. Purchasing power risk is also known as purchase inflation risk. ROI denotes return on investment, return on interest, return on income, risk on investment. The correct answer is option A, return on investment. So ROI denotes return on investment. Variation calculation and measuring the standard deviation is one way of measuring the option A risk, option B return, option C speculation, option D gambling. The correct answer is option A risk. Variation calculation and measuring the standard deviation is one way of measuring the risk. Which of the following statement is correct regarding profit maximization as the primary goal of the firm? Option A, profit maximization considered the firm risk level. Option B, profit maximization will lead to increasing short-term profit at the expense of lowering expected future profit. Option C, profit maximization does consider the impact on individual shareholder earning per share. Option D, profit maximization is considered more with maximizing net income than the stock price. The correct answer is correct answer here is profit maximization is concerned more with maximize net income than the stock price. Okay, so this statement is correct regarding profit maximization as the primary goal of the firm. The profit maximization is concerned with the maximize net income than the stock price. MCQ number 183. In 2 years, you are receive rupees 10,000. If the interest rate were to suddenly decrease, the present value of that future amount to you would option A fall, option B rise, option C remain unchanged, option D cannot be determined. The correct answer is option B rise. In 2 years, you are received rupees 10,000. If the interest rate were to suddenly decrease, the present value of the future amount to you would rise. A set of possible value then that a random variable can assume at their associate probabilities of occurrence are referred to as option A probability distribution, option B expected return, option C standard deviation, option D coefficient of variation. The correct answer is option A probability distribution. A set of possible value that a random variable can assume and their associate probabilities of occurrence are referred to as option A, probability distribution. Okay, so it is a probability distribution, a set of possible value that the random variable can assume and their associate probability of occurrence are referred to as probability distribution. Which of the following is not an operating goal of an insurer? Option A, comply with legal requirement. Option B, concentrate risk. Option C, meet customer need. Option D, earn a profit. The correct answer is option B, concentrate risk. Okay, so this is not the operating goal of a insurance. So comply with the legal requirement, meet a customer need, earn a profit. All these are the operating goal of an insurer, but concentrate on a risk is not the operating goal of an insurer. Next MCQ, which of the following is not a reason insurance are subject to governmental regulation? Option A, protect consumer against fraud. Option B, guarantee insurer profit. Option C, maintain insurer solvency. Option D, prevent unfair discrimination. The correct answer is option B, guarantee insurer profit. So which of the following is not a reason insurance are subject to governmental regulation? It is guarantee insurer profit. Which bank is known as Bankers Bank? Option E, RBI. Option B, SBI. Option C, PNB. Option D, NABARD. The correct answer is option A, RBI. So which bank is known as Bankers Bank? It is option A, Reserve Bank of India. So Reserve Bank of India is known as Bankers Bank. Next MCQ. Dash is the price paid by the insured for the risk undertaken by the insurer. It is wages. Option B, premium. Option C, salary. Option D, compensation. The correct answer is compensation. So compensation is price paid by the insured for the risk undertaken by the insurer. Next, a group insurance provides insurance cover to a number of persons under a single policy called as a master policy. So here the answer is your master policy. So group insurance provides the insurance cover to a number of people under a single policy and it is called as a master policy. Next MCQ. Personal accident insurance is highly attractive for dash. Option A, individual. Option B, partner. Option C, industrialist and businessman. Option D, senior citizen. The correct answer is option A, individual. It is a personal accident insurance. So personal accident is highly attractive for the individuals. Then which principle means that make good or compensate the loss? Option A, principle of contribution. Option D, principle of subrogation. Option C, principle identity. Option D, principle of insurable interest. This is all the principles which are related or which is between the. So these are the basically the principle between the insured person and the insurance company. So this is a mutual contract between two. So based on this, there are certain principles. So which principle means the good or compensate the loss? It is a principle of indemnity. So principle of indemnity means that make good or compensate the loss. Next MCQ. Which insurance cover the financial loss arising out of poor health condition or due to permanent disability? Accident insurance, health insurance, life insurance or burglary insurance? The correct answer is option B, health insurance. So health insurance cover the financial loss arising out of the poor health condition or due to permanent disability. Risk is a chance of option A, peril. Option B, accident. Option C, event. Option C, loss. Option D, event. So risk is a chance of loss. Peril means dangerous. Accident, you know, loss. So risk is a chance of loss. So whatever risk we take is just because we have a chances of loss. Now next is principle of dash refer to the sharing of loss among co-insurance. Option A, indemnity. Option B, guarantee. Option C, contribution. Option D, social. The correct answer here is option C, contribution. So principle of contribution ratio refers to sharing of loss among two co-insurers. So this is happen basically with the person who is a person or firms which want a insurance with a high claims. Okay, so this insurance amount, if there is any kind of uncertainty and then the claim has to become, then one company, if they settle this claim, that will be used. So in for such types of losses, the huge loss, such type of huge losses, the two or three companies come together and then they give the insurance in contribution. So it is known as a principle of contribution to sharing of loss among co-insurance. Okay. Next is dash insurance is a cash value policy that provides lifetime protection by paying a lump sum death benefit. Option A, endowment insurance. Option B, term insurance. Option C, whole life insurance. Option D, life insurance. The correct answer is option D, life insurance. Life insurance is a cash value policy that provides lifetime protection by paying a lump sum death benefit. Dash is a cause or condition added to a basic life insurance policy which provide additional benefit at the option of the purpose. Option A, nomination. Option B, exclusive. Option C, rider. Option D, loan. The correct answer is option C, riders. The rider is a clause or condition added to a basic life insurance policy which provide additional benefit at the option of the purpose. The correct answer is option C, rider. So rider is a cause of condition added to a basic life insurance policy which provide additional benefit at the option of purpose. Okay, so rider is something which is added to the insurance. Okay, so it is something extra. Okay, so you will get covered under that rider. So suppose you have taken the life insurance policy, but simultaneously you will also get covered for your illness. Okay, so if you are hospitalized and there are so many diseases mentioned in the insurance policy, if you take the benefit of that decision, that is called as a rider, and you have to pay a extra premium for this. So rider is a clause or condition added a basic life insurance policy which provide additional benefit at the auction or the purpose. Then what is a proof of the insurance contract? So what is a proof? Insurance is a contract between insurer and the insurance company, and it is known as policy. Okay, as we all know, it is called as the insurance policy. Insurance, the consideration paid by insured to the insurance company is known as option A, money. Option B, fund. Option C, return. Option D, premium. The correct answer is option D, premium. So whatever consideration we paid by insured to the insurance company is known as premium. In dash, a part of your insurance premium go toward a mutual fund investment while the remaining goes toward the death benefit. Option A, term plan. Option B, endowment plan. Option C, unit link insurance premium. Option D, whole life insurance. The correct answer is option C, unit link insurance premium. In unit link insurance premium, a part of your insurance premium go toward a mutual fund investment while the remaining goes toward a death benefit. Okay, so this is a combined benefit of enjoying the dash policy pay a certain percentage of the plan sum assured after regular interval. Option E, term plan. Option B, endowment plan. Option C, money back. Option D, whole life insurance. The correct answer is option C, money back. So money back policy pays a certain percentage of the plan sum assured against regular interval. So in money back plan, you have to pay certain money as a premium, and in return of that money back, as a name itself explain that after certain duration, after 3 years gap, after 4 year gap, as in your policy document it will be mentioned, you will get a certain amount back for your expenses. So that is called as a money back policy, pays a certain percentage of the plan sum assured after regular interval. So please prefer subscribing and click on notification bell icon for the next part. Thank you.